Hello everyone and welcome to this webinar. My name is Paul Kirkwood and I'm the Head of Learner Experience at ACCA. And I'm going to introduce the session today, as well as our expert presenter, James Patrick, who is the Head of Professional Education at ACCA. Now this session is designed to help students who are planning to take the Financial Accountant ACCA exam. It's designed to build your confidence by providing both technical and exam technique guidance, and we'll do this by debriefing exam standard questions. I'm delighted to introduce James, the Head of Professional Solutions at ACCA. I'll leave it to James to introduce himself in more detail and the session itself. So over to you, James.
Thanks very much, Paul, and thanks to everyone for joining us, whether you're joining us live or listening and watching the recording. As Paul mentioned, I'm James. I'm Head of Professional Education here at ACCA. I work closely in the Professional Education team with Paul. I've got over 12 years of experience in accountancy training and developing qualifications. So similar to Paul, I have a tutoring background, and I'm really excited to have the opportunity to go over some content with you guys as part of your preparation for your FA exam. As Paul mentioned, we're going to have a bit of a recap of exam approach and some tips hopefully that you'll find useful, and then we'll have a look at some narrative questions, some calculation questions, and then one of the longer questions at the end of the session as well. And as Paul mentioned, please do feel free to ask questions throughout. Paul's on hand to answer questions as we go along, and then hopefully we'll have a bit of time at the end to address some questions live as well. Okay, Paul mentioned that we've got a couple of poll questions. Let's get stuck straight into the first one, guys. So the reason why we like to ask these questions is it's good for us as an education team here at ACCA to understand, where you guys are in your journey. So the first one, if you wouldn't mind, have a little click on screen. Just let us know whether you've actually booked your exam yet. And I'll give you a couple of seconds just to say yes or no. Okie doke. Okay. Those of you who responded, 60% have said yes and 40% have said no. There's not a right or wrong answer for this question at all, guys, so don't worry. What I would say, though, is thinking back to my own days as a student, I must admit that I did like having the exam booked. It gave me something to work towards. So that's something you might wish to consider. Having that target in place, having that focus that you need to be exam ready by the certain date. So well worth considering if you haven't yet booked. Okay, at the moment, guys, before this session, how confident are you of passing? Now ignore AB, we're obviously talking about FA today. So how confident are you of passing the FA exam right at this moment? And again, there's no right or wrong answer, just interested in how you guys are feeling before this session today. So I'll give you, again, a few seconds just to click. How confident are you right now of passing the FA exam? Okay, good. Do you know what? That's great, guys. A couple of very confident people, absolutely delighted. I salute that sort of confidence. That's good to see. A lot of people, the vast majority of people, are expecting to pass. Great. So hopefully we can turn you into that reasonable comfort of passing to even more comfort about passing at the end of this session and beyond. 23%, look, don't worry, guys. You've still got time, unless you're sitting the exam, this afternoon, and you haven't done any revision, you still have time to get back up to speed. We'll talk about the different components that you need to be ready for your exam. So look, don't think you'll pass. Well, fine. We've got time in this session and beyond with the rest of your study to address that. So no worries there at all, guys. Okie doke. So let's just have a general chat, I suppose, about our approach to the exam. Let's be blunt. These exams are challenging. I think it would be remiss of us to say otherwise, to be honest. They're challenging because this is a prestigious and high quality qualification. So it's never going to be easy. But the important point to note is that it is achievable. People do pass the exam all of the time. It's worth remembering as well, guys, that we're looking at a pass mark of 50%. So the phrase that I like to use is competence, not perfection. So you need to demonstrate to the examining teams, not just in the FA exam, but across all of our other exams, that you are competent, but you don't need to be perfect. No one gets 100% in these exams, guys. Well, very rarely that happens. So we're only after 50%. And that's going to be a key feature of our exam technique preparation as well. So how do we achieve exam success? What do we need to do if we're not feeling perhaps that confident at the moment? Well, there's no shortcut to having to have the technical knowledge. So you need to have invested time using your study materials, understanding that syllabus. There's no shortcut to this, guys. What you then need to be able to do is apply that technical knowledge to scenarios. And having excellent exam technique is going to give you the best chance of demonstrating that you've got the technical knowledge and you can apply it to the scenario. And the way to develop excellent exam technique is to listen to the advice of your tutors, hopefully follow some of the tips that we'll discuss on this session, and practice, practice, practice. Practice as many questions as you can. Something that I always used to tell my students is we need to be pragmatic about approaching these type of exams. So these on-demand computer-based exams. There's going to be some questions that actually you're okay with. They might be slightly easier questions, or they might just be on an area of the syllabus that you're particularly comfortable with. You know you're going to get some questions like this, guys. So look, these questions that you're comfortable with, we're not rushing them. We're not trying to save time or anything like that. We'll take our time and methodically work through them. But let's be honest, these type of questions we need to be trying to get right. And if it's an area that you're comfortable with, like I say, don't rush, and you have got time to have a quick double check just to make sure that you have secured that so-called easier mark. The next stage, the amber colour here, are questions that are tough but doable. Okay, so there'll be tricky questions. We know that. We've mentioned that already. It's a tough exam, but a doable exam. So for these slightly tougher questions where you're reasonably confident that you've got a good grasp, you've practiced some questions that are similar in the past. So for these ones, let's try and get as many as we can. We're not going to necessarily get all of them right. We know that we don't need to get all of them right, but we're going to have a damn good go at getting as many correct as we can. And what I would say, guys, is definitely have a go. Okay, even if you're not sure if you're totally correct or you're not sure if your working is spot on, have a go. It would be awful to leave questions that were tough but attainable blank, or not to have answered them at all. And even, let's be a little bit cynical here, even make an informed guess if we have to. There's no harm in that. It's part of our exam technique. If you make an informed guess, there's a chance that you'll secure some marks. Again, being pragmatic, there's going to be some questions that are very difficult. Again, there's no way around that. There are going to be some questions that you look at during the exam and you think, well, I don't remember practicing this type of question, or I know this isn't an area that I'm particularly strong on. How you deal with that emotion of not being able to even perhaps start the question could be important. And the key, guys, and I want you to remember us discussing this when you're in the live exam, the key is to say, wow, okay, this is a hard question. What is my thought process? Well, my thought process is, well, I was expecting a few hard questions, so it's not going to throw me off my game. Okay, that's a hard question. And I know that if the person sat next to me was looking at this question, they could well be finding it hard as well. It's not necessarily a reflection on my preparation or my ability to pass this exam. So, as I say, let's be pragmatic. Let's be honest with ourselves. There's going to be some tough questions on there. So what do? Well, we don't waste time faffing around, stressing, worrying that we can't do it. We acknowledge that it's a hard question. Maybe we flag it, and maybe we come back to it later. And maybe even when we come back to it later, perhaps we feel a bit more confident because we've answered the rest of the exam well. Even if we're still not sure how to approach it, just guess, guys. Who knows? That might be the extra mark or so that pushes you from a marginal pass into more of a comfortable pass. Okay, following that theme, a bit of repetition here perhaps. So fundamental advice from ACCA, from the education team here at ACCA. Try and study the whole syllabus. You can reinforce your understanding of the syllabus by practicing questions. And again, something that I used to tell my students is, look, if you're comfortable that you've got a reasonable grasp of the syllabus, of the technical content, get stuck straight into the practice questions. If you struggle with a question, note down what syllabus area that relates to. And then you've got a list of areas of the syllabus that you're perhaps not so confident on. You then, as part of your next study session, go back and revise those technical areas. And the next time you attempt questions, you'll hopefully be able to answer them a bit better because you've reinforced technical knowledge of areas that you're perhaps unsure of. General bit of feedback from our colleagues in the examining teams. Number entry questions tend to be a weak question format for candidates, and I've picked out some fairly standard ones for us to have a chat through later on in this session. Again, we often get feedback from our colleagues in the examining teams about the fact that the examiners get the impression when they're reviewing students' performance that they don't necessarily always read the questions carefully. And a common phrase that we hear from our examining teams is that students tend to answer the question that they wish they were being asked rather than what the question is actually asking them to do. So perhaps it's when students are rushing, they see a few key words in the requirement and think, oh great, I'm comfortable with this, I know how to calculate this. So when we start to look at questions, we'll talk about the importance of going straight to that requirement and investing an appropriate amount of time, ensuring that we fully understand what we've been asked to do. A similar point as well in terms of finishing off our calculations. Now, textbook example here is where we've perhaps got a multiple choice question. It's a numerical one. And some of the incorrect answers, or distractors as they're also known, could be numbers that relate to a partially completed calculation. So be careful about getting halfway through a calculation, arriving at a subtotal perhaps, seeing that subtotal as an option in the answer and thinking, oh great, that must be correct. Not necessarily. So perhaps it comes down to confidence, but you've got to follow through that calculation. Just because you recognize a number as a potential answer doesn't mean it's the final and correct answer. We've talked about this tough question approach already, and I really do want to reinforce it. Let's not get bogged down in those tough questions. You know, we've talked already about what our approach is going to be. We're going to sit there in front of our screen and we're going to say, well, that is a tough one, but I'm not going to let it get to me. It's only one question. It's only one part of the question. I only need 50%. I'm going to keep cool. I'm going to keep calm. I'll flag it and I'll come back and maybe have a go at it later. And we've talked about being really pragmatic and guessing. You know, if you have got 2 minutes left and you've got 2 questions unanswered, you flag them up, go back to them quickly and guess. You know, who knows, guys, as I say, that might be the mark that turns you in from a marginal pass into a more comfortable pass. Okay, good. In terms of planning our time, just some suggestions here, so nothing too revelatory to be honest. So we know that we've got 2 sections. We know that overall we've got 2 hours or 120 minutes to complete the exam. Works out at 1.2 minutes per mark. Let's break it down between section A and section B. We're expecting 35 questions in section A, so 84 minutes. What I would tend to do, guys, rather than trying to keep track of 84 minutes, I'd break it down. So roughly halfway through section A, I'm thinking, okay, maybe 17 of the questions, around 40 minutes. So I'm not suggesting that we try and time ourselves for every question that we do, and we try and keep track of every 1.2 minutes little bit of time. I'm saying, look, let's keep a general eye on it. Let's monitor our progress. And maybe, as I say, a bit of a sense check after the first 17 questions. Am I around that 40-minute mark? Section B, we've got 2 big questions, as we know, and we'll talk in a moment about why this is a good thing, why the big questions should be something that we look forward to. 30 marks, 36 minutes, 18 minutes each, easy. So that's, a reasonable amount of time for us to try and manage across those 2 big questions. Common question that we get, and I wouldn't be surprised if Paul is answering this sort of question as I speak, guys. Should I start with section A or B? Well, look, at the end of the day, guys, it's your choice. There's no right or wrong way necessarily of doing it. My personal preference, and if you guys were pushing me for my advice, I would always start at section A. And the reason for that, as we've discussed, there's going to be some easy questions in section A. So within the first, let's say, 3 or 4 questions in that exam, there's going to be at least 1 or 2 that are really easy ones for me, ones that are on an area of the syllabus that I'm comfortable with. One that I've practiced a question that's very similar to just the day before or the evening before or whatever. And I like that idea of starting off with section A, getting a few of those easier questions in the bag, getting warmed up, if you will, before moving on to section B. Because as we'll discuss in more detail shortly, guys, the section B long questions are just a combination of smaller questions all about the same scenario. So why not get warmed up with section A? That'll leave us in a really strong place to do well in section B. So, in summary, fine, it's your choice. I would probably recommend, to be honest, starting with section A. There's no reason not to be honest. Okay, great. Just another little poll. Again, no right or wrong answer here, guys, just for our interest. Are you planning or are you already studying with a learning provider? So like I say, no right or wrong answer, no pressure. Just let us know what your study plans are. I'll just give you a few seconds to do that. Okie doke. Okay. Great news. Over 80% are already studying with a learning provider. 18% planning not to. And listen, you hear this from us at ACCA all the time. We do recommend, if at all possible, you do study with a learning provider, recognising the fact, guys, that that's not necessarily always possible. But great that 80% are already with a learning provider. Pleased about that. Okay, good. Let's get into, well, from my perspective, the most interesting and exciting part of this session, the bit that I've been looking forward to the most. And this is just for us to have a chat through and debrief some questions. I mentioned before, I think, about having some narrative ones to discuss, then some calculation ones to discuss from section A, and then I want to have a look at a section B question as well. Okie doke. So, first question here, a narrative one. I'll be honest, guys, it's one that I would expect us to get, but we do have to make sure there's no complacency. So I'm seeing this, I'm glancing at this initially. I'm saying, okay, true limited liability companies, great. It's a theoretical question. It's fairly basic. It's underpinning stuff, really, for financial accounting, financial reporting in general. But let's be respectful to the question. Let's make sure that we review it carefully. So, what is the requirement? Which of the following statements are true about limited liability companies? So, what are true? Okay. The company exposure to debt and liability is limited. Now, if I was skimming this quickly, I think there's a chance that I could get this statement wrong. And the reason I say that is we know that the limitation of debt and liability is a key feature of being a limited liability company. That's the whole point of them, isn't it? But remember, the debt and liability is limited for the owners or the shareholders of the company, not for the company itself. So the examiner potentially trying to catch us out here, throwing in a very common phrase to our syllabus, but not in the correct context. So the company is not limited in terms of its exposure to debt and liability. That is not true I am not going to be including 1 in my answer. Okay, do limited liability companies have to produce financial statements? Yes. Yeah, they do. So financial statements are a key requirement for companies. I like to. It's true. There's no two ways about it. A company continues to exist regardless of the identity of its owners. Well, yeah, again, that's another fundamental principle of a company, isn't it? Shares can be bought or sold. The company is a distinct legal entity. There's various different ways that we could understand number 3 to be true. So I like 2 and I like 3. I haven't even looked at my options yet, but I know one of the options is going to be 2 and 3. And there it is, guys. There's C, 2 and 3. So really, when you look at it, that is a straightforward question. But what we've done is we've had the appropriate thought process. We haven't been caught out by point 1. We've shown the question the respect it deserves, but we've got our marks in the bag for that. Great. Let's have another look at another one. So, thinking carefully about what we're being asked to do. So which 2 of the following, which 2 of the following are differences between a sole trader and a limited liability company? So I'm looking for 2 of the responses that are setting out differences between sole traders and limited liability companies. Okay, first one. Sole traders' financial statements are private. So I'm reading that, I'm thinking, yeah, absolutely. That's true. So one way of thinking about it, and the way that we tend to think about it here in the UK, is to say that a sole trader's financial statements or accounts are primarily used for the income tax return. And that is private. That's not something that is publicly available. Contrast that with the second part of the statement. A company's financial statement are sent to shareholders and may be publicly filed. That again is true, guys. And again, thinking about it from a UK perspective, just as an example, UK companies have to file their accounts, their financial statements with what we call Companies House. And that is very much in the public domain. So what have I got here? Sole traders' accounts, financial statements are private. A company's might be public. Yes, I agree that that is a difference. So that is one of my 2 statements about differences between sole traders and companies. Response B. Only companies have capital invested into the business. Okay, so I can imagine investing into a company, whether it's by buying additional shares that they issue, other types of equity investment in a company, fine. But hold on, it must be possible to invest into a sole trader as well. So if you think about, I'll use a personal example, guys. My brother is a landscape gardener, and he recently had to buy a new van to expand his business, so a new vehicle, and he had to invest personal money into his sole tradership business in order to purchase that new vehicle. So yeah, actually a sole trader could invest. So there's a similarity there between a sole trader and a company. There's no difference. So I don't like B. B is not one of my answers. Okay, C. A sole trader is fully and personally liable for any losses that the business might make. Yeah, that's true, guys. That's true. That's because the liability is not limited. So sole trader, fully and personally liable for any losses. Yeah, true. For a company, remember, the shareholders have that protection. They have that limited liability. So the owners of a company do have a limitation in their liability. So there's a difference between a sole trader and an owner or shareholder of a limited liability company. So I like C. For completeness, I'm just going to have a look at D. I'm not expecting it to be one of my answers because I already like A and C. But D, revaluations cannot be carried out in the financial statements of a company. Well, guys, that's nonsense, really. You can revalue stuff in the company. We've seen it throughout the FA syllabus and beyond as well. So great, I'm comfortable. A and C are my correct answers. Okay, good. Let's keep up the momentum here, guys. So I think I've got one more narrative one that I wanted to look at, and then we'll get stuck into some number ones, which require a little bit more thought sometimes. Okay, but first of all, let's have a look at this narrative one. So which of the following statements are correct? Capitalised development expenditure must be amortised over a period not exceeding 5 years. And I'm looking at that and thinking, well, yeah, I know capitalised development expenditure should be amortised. So the first part of that, yeah, okay, that seems fine. But the 5 years bit, no, that's not true, is it? You know, we should be thinking about the useful economic life of that development expenditure that we've capitalised. There's no specific time limit set. So again, part of that statement is true, but not the whole of it. So I'm saying no, one is incorrect. I will not be selecting it as part of my answer. Capitalised development costs are shown in the statement of financial position under the heading of non-current assets. Well, what we've described there perfectly is the overall accounting treatment of capitalised development costs. So yeah, no two ways about it. Number 2 is correct. I like it. Okay, if certain criteria are met, research expenditure must be recognised as an intangible asset. Well, here we're back to the difference between research and development, aren't we, guys? So when a company is doing R&D or research and development, the research aspect of it would always be expensed. The development aspect could be capitalised. So no, 3 doesn't ring true. So summarising where I am, the answer I like is 2. And if I look at my options, there's B and there is 2 only. So I suppose if we were recapping our approach to these narrative questions, what we've done, guys, is have a look at the requirement. We've fully understood them, and then we've taken our time working through the different options. What we haven't done, so the last question is a good example of that, what we haven't done is looked at any of the A, B, C or D. I don't want to look at them until I know what the answer should be. I don't want looking at A, B, C or D to influence my thought process. I decide what the answer should be, and then I confirm that it's actually one of my options. And that's a useful bit of exam technique to do, not just for the narrative, but also for the calculation multiple choice questions as well. Okay, good. So those are narrative questions. As I say, I always used to quite like them, but we must make sure that, as I said before, we must make sure that we show them respect. Sometimes a statement will be partially true, but not completely correct, and that's something that we need to look out for. Let's move on to some numerical questions, guys. So I'm going to take my time working through some questions. I've tried to pick some good examples that give us decent coverage of some commonly examined areas. Obviously, we don't have time to cover the whole of the syllabus, but these are some common areas that are often examined in one way or another. Okay, question 1 that we're looking at here, absolutely textbook type of question. The first thing I do, though, is go straight to the requirement. So there's a lot of information here. I'll get to that in due course. There's no point in me looking at that information until I've seen what's in the requirement. So, taking my time with this. What amount should be recognised in current assets in respect of receivables in the statement of financial position at September X9? So my year end is September X9. What is the receivables balance? So I'm going to need to work out what that receivables balance should say in the statement of financial position. Now I know what I'm looking for. Let's go back and let's have a look at how I'm going to get there. Okay, so at the year end in the accounts, the balance on the receivables control account is 644,000, excuse me. So that's my starting point. So subsequent to that 644,000, I've got some other adjustments to consider. Number 1, I need to write off debts totaling 24 grand. I'm writing off debts, guys. Okay, that's money that I'm not going to receive. So again, I'm not saying that we'd necessarily go through this process, but I'm saying it's a cost to the business I'm having to write off money that I thought I'd get, but now I know I don't get. It's a cost of the business, so I'm going to debit the profit or loss, and I'm going to credit the statement of financial position. And we'll follow that through in just a moment. I'm just thinking about trying to demonstrate my thought process. Written off debts, okay, not going to get the money. It's a cost to me. It's going to credit my statement of financial position. It's going to reduce my receivables balance. Okay, fine, understood. Point 2, record a receipt of £12,000 in respect of a balance which had previously been written off as irrecoverable. So here, for whatever reason, we thought, okay, our customer, whoever they are, is not going to give us the $12,000. Let's write it off. Let's effectively take it out of the account. Now, it's already been written off, so actually it's not included in receivables anyway. So if I'm thinking about that 644,000, it doesn't include the £12,000. Even though I've now received the £12,000, it's not going to change my 644,000. So not included in receivables anyway, no adjustment required. So in fact, I can just ignore point 2. Doesn't matter to me. Okay, number 3, equivalent to 2% of the trade receivables at the year end. At the start of the year, the allowance for receivables was $9,600. And I'm looking at that and I'm thinking, okay, well look, an allowance is based on, or the allowance is based on 2% of the trade receivables at the year end. Okay, that's fairly clear. Actually, do you know what? I don't really care what the balance was at the start of the year. It doesn't really matter to me. All I'm concerned about is doing 2% of the receivables balance at the year end. So what is, before my allowance for receivables, what is my balance? Well, we could say that it's our 644,000, but remember, we've got that write-off to do. So we'll start with our 644,000. We're then going to write off 24,000 of that. Okay, so we're saying that $24,000 in our receivables balance, we're not going to receive. We're writing it off. We're not going to get that money. We therefore need to reduce our receivables balance accordingly. So that would take me down to a more realistic or more accurate balance of what is owed to the company of $620,000. Is that our answer? No, not yet, because remember, we now have to make an allowance for receivables based on the 2%. So again, just setting out my working fully, we've got allowance at 2%, and I'd like to pretend I was doing this off the top of my head, guys, but I'm not. I've already done my workings just to make it efficient for you. But that comes out 2%, $12,400. So again, I'm making allowance for receivables relating to an amount that I don't think I'm going to receive of 2% of the balance, $12,400. That gives me a final answer of $607,600. And then all I'd need to do is pop that answer into the response area here, and my work is done. So I know that I've probably overly elaborated in terms of all the workings that I've shown you guys. What I wanted to get across was that thought process. So remember, I went to the requirement. I understood that I need the final balance of receivables that's going to be included in the financial statements. I knew what my starting point was, and I methodically considered each of the potential adjustments to that starting point. Okay, let's have a look at another one. And it's bank reconciliations. I love a bank reconciliation, guys. It's just a mini little puzzle for us to get our heads around, and it's one of those things I always think that separates accountants from non-accountants. If you can get your head around understanding why the financial statements might be showing a different balance for cash compared to what the actual bank statement is showing, then you're an accountant, basically. That the general public would be baffled by it, but we as accountants understand that sometimes the bank statement balance will be different to that which we're showing in the accounts. But enough of us showing off. Let's have a look at this question. So straight to the requirement, as always, my friends. So what should be the adjusted cash book balance per the bank reconciliation at 30th of September X9. So what should the adjusted cash book balance? So effectively, I'm looking for what balance should be in the accounts or the financial statements. What amount of cash should we be showing in the accounts at the year end? Okay, that's what I'm looking for. I know that. Great. Let's go back to the scenario. So a company has prepared its bank reconciliation at the year end, 30th of September X9, taking the following information into account. Let's work our way through these. Let's understand what it's telling us. We've got outstanding lodgements. So this is where we have put money into the bank account, but it has not cleared the bank account. So we've maybe paid in some checks, we've paid in some cash. The bank has not yet processed that. What does that mean? Let's think about that. Well, that means that we have recorded that transaction, that money coming in our cash book, but it's not going to be shown on the bank statement. Okay, fine. Let's bear that in mind. Unpresented checks. This is where we've written checks maybe to our suppliers. So we've paid for some raw materials maybe. We've sent the checks off, but they haven't been cashed by our suppliers. So we've recorded the fact that we've technically made a payment to our suppliers by writing that check and sending it to our suppliers. But again, these checks, these payments haven't cleared the bank. So they've not cleared the bank. We need to think about how we adjust for that in part of our bank statement, bank reconciliation, excuse me. Number 3, be careful about number 3, guys. Dishonored check not entered into the cash book. So a dishonored check, well, that could be a check that hasn't been completed properly. Maybe it hasn't been signed. Maybe it's damaged. Maybe it's illegible. For whatever reason, the bank is not going to accept that check. So it's not going to go into the bank statement. And hold on, it's not been entered into the cash book either. So actually, not on the bank statement, not on the cash book, it's irrelevant, guys. It's a little bit of what we call a red herring in the UK. It's irrelevant to us. It doesn't matter. It's not going to impact our working. So remember, thinking back to that requirement, we're after the adjusted cash book balance per the bank reconciliation. So as you'd expect, we're then told about the company having an overdrawn balance of $1,280. Okay, overdrawn balance. So cash at bank would be an asset. It would be a debit balance. I'm overdrawn. So let me think about this methodically. We're saying if I'm starting off with the balance per the bank statement, because remember my ultimate goal is to get to the balance per the cash book, it's overdrawn, so it's a credit of $1,280, and that's a credit balance. We're overdrawn, guys. Okay, we've got 2 adjustments to make, haven't we? Because we crossed out that third one. So the first adjustment is to say our outstanding lodgements. Bear with me whilst I just scribble this up just for completeness and hopefully clarity. So we've got outstanding lodgements, and remember this is money that we've paid in but hasn't actually cleared, isn't actually showing on the bank statements yet. So if I'm taking my bank statement and wanting to get to the situation of the cash book, I need to increase the balance at my bank. I need to debit that asset with the £12,000. So it's showing in the cash book. I want my cash book balance to reflect the fact that $12,000 has come in, but it hasn't shown in the bank statement. I'm going to increase the balance in the bank statement with that £12,000. Conversely, guys, I've got those unpresented checks. And they are payments that I've made that I haven't yet seen clear the bank, but I've recorded the fact that the payment has been made in my cash book. So if I want the correct balance per the cash, I'm going to have to credit, I'm going to have to reduce my cash by that 14,700. What does that get me to? That gets me to a negative or a credit balance of $3,980. Now, what I haven't yet done as I haven't looked at what the options are for the correct answer. I don't care about that, guys. I'm going to be methodically working my way through the calculation, having the confidence that if I've done it right, it's going to give me the correct answer. So 3,980 as a credit balance, overdrawn effectively. Yeah, there it is, as I knew it would be, guys, option number 4. So I haven't let myself be driven by the options. I've done my calculation and then I've seen it pop up. Okay, let's look at one more Section A question, and I'm really keen to have a look at a Section B question with you guys. So I've got one more to look at, and then we'll get stuck in and spend a bit of time on Section B. And this is one of my favourite types of question because it enables us to get an old T account out, which is always another classic accountant's trick, isn't it? Okay, let's follow our process. So we know that we are going straight to the requirement. So what is the total heat and light expense for the year ended September X9? Okay, fine. So what balance am I going to be showing in my statement of profit or loss for heat and light? Okay, what's the situation? We've got Dania. Dania owns a small shop, and we've got the following information about the heat and light account for the year. Fine. Okay, and we've split it between gas and electricity. So just being very careful about the dates. We've got the start of the year, i.e. balances brought forward, and we've got the end of the year as well. And we've got some prepayments, and we've got some accruals, and we've got some payments made during the year as well. So lots to keep track of. You know, there's different ways of doing this, but the way that I like to do it is to break out into a T account. So like I say, you don't have to do it this way, guys, but you know, I enjoy any excuse to get back to a good old-fashioned T account. So let's work our way through the different components here. So starting from the top left, at the start of the year, we've got a brought forward gas prepayment, and that is of £1,000. So last year, at the end of last year, so at 30th of September X8, we realised that $1,000 worth of gas didn't relate to that year, it related to the following year, i.e. the year to September X9. So that means that this £1,000 prepayment would need to be reversed, and I need to be showing that as an expense for the year to September X9. How do I show something as an expense? I show it as a debit, as I've done here. So I'm reversing that prepayment, and I'm showing it as a debit this year. And just for completeness, I suppose I should write, 2000 X9 up here, little note to self. Okay, what else have we got brought forward? Well, if we look at electricity on the top right, we've got the electricity. I'll just say elect as a little shortcut, and we've got an accrual that's brought forward. So this is where we had expenses that related to the year ended X8, but we hadn't been invoiced yet. So we had to make an accrual last year. We've recognised expenses in X8 that hadn't been invoiced. We've already recognised that $500 in X8. We've got to make sure that we don't recognise it again in X9, so we will credit that T account. Want to make sure that we're reflecting the fact that the $500 was included last year and not this year. Okay, we've then got some payments. So during the year, we paid gas of $5,000. You can imagine the double entry for that, can't you guys? So credit bank, credit payables, whatever, 5,000, debit the profit or loss. So debit the heat and light account, 5,000. Same for the electricity, and we are told that that was 7,800. Nearly there, guys. We've just got to finish off with some carried forward balances. So for the gas, we can see that at the year end September X9, we had an accrual for £2,000. And remember, an accrual is a way of us bringing in costs that relate to our year, but we haven't yet been invoiced for. We haven't paid it, or we haven't been invoiced for it. And again, thinking about that double entry, would be debiting the profit or loss and crediting the statement of financial position. So carry forward a nice accrual for the gas of £2,000. And this is us recognising that cost in our year, even though we haven't paid or been invoiced for it. What about the electricity? Oh, conversely, we've got a prepayment. So prepayment for the electricity of $1,200. Now, what am I saying with the prepayment? Well, we're effectively saying that within that $7,800 that I've paid for electricity, actually 1,200's worth relates to next year, not this year. So I need to reduce the amount of the expense this year by that 1,200, which should be recognised next year. Okay, nearly there. Just finishing off the T account, the best bit. So what are my totals going to be? Well, my debit side is a lot bigger, so I total up my debit side, 15,800, 15,800. What am I going to need? I'm going to need a balancing amount to go to my profit or loss on my credit side, meaning that I'm taking a debit of 14,100 to the profit or loss. And that is the number I'm looking for, guys. So the light and heat expense for the year, reversing the prepayment accruals brought forward, recognising the stuff that's been paid during the year and adjusting accordingly for accruals and prepayments at the end, gives me my 14,100. And that's what we're looking for. Okay, good. I'm conscious of time. I'm having too much fun, so I'm probably taking too long. Let's push through to a section B question. Now, we won't necessarily address all of section B due to time constraints, but I do want to talk you through some overall tips and techniques for section B. But keep those questions coming in. I can see Paul typing furiously, answering as many as possible, and a thumbs up from Paul in our room here. Okay, good. So section B, we know that we're going to get 2 questions, and we're starting to get, in theory, a bit more high level here. We're starting to test our ability to understand and to draft or create financial statements. And that could be for a single entity or a group of companies. And there might be some high level stuff here in terms of calculating ratios and then interpreting ratios. Different question format types, number entry, so typing a number in, drop down menus, pull down menus, multiple choice, response matching. There's different options. Remember, the question format type doesn't actually matter. So if you think back to the section A calculation questions we were doing, we did our numbers and then we typed in whatever number we got to. We did our numbers and we selected the corresponding multiple choice option. So really, guys, you don't, get familiar with the exam environment, get familiar with the different format types, but actually our approach, our calculations don't really change. And it goes without saying, we've said it before, exam question practice and debrief is crucial. Okay, some feedback here from my colleagues in the examining teams, guys. So areas that students tend to struggle with, so areas that I want to make sure that you guys are focusing on, because they could well come up. Single entity financial statements, statement of cash flows, and consolidated financial statements. Now, we're going to pick out statement of cash flows. It's an area that, in my opinion, unfairly or there's no rationale behind it, but for whatever reason it's an area that students tend not to like. Statement of cash flows. So the whole debit or credit thing makes sense in terms of preparing accounts. Cash flows seem to scare people unnecessarily, in my opinion. So make sure you're happy with those 3 areas. Obviously, we've picked out a cash flow question for us to consider, and we won't necessarily finish it, but we'll spend a few minutes approaching it. Okay, key things I want to pull out for a section B question. We've got a lot of information here. None of it is unexpected. We'd always expect to see some extracts of financial information, fine, but there's a lot of information. What do? We go straight to the requirement. Complete the statement of cash flows for the year ended October X7 for Gia Frost Company. And I'm reading this and I'm thinking, well, do you know what? not fazed by this at all, not fazed by the statement of cash flows whatsoever. I've got some information about the accounts. I've got a very, very high level summary of the profit or loss. I've then got a bit more detail about the statement of financial position. All I have to do, guys, is consider the cash implication of the information here. Now, it's unlikely in the exam environment that you're going to get full marks for the cash flow. I like to think that if it wasn't timed and you're in the comfort of your own home, sat at your own desk on your own laptop, you could put this puzzle together and you could get full marks. But under time pressure, under exam stress, it's unlikely that you're going to get this completely correct. Great if you do, but unlikely. And that's not our mindset. What are we going to do? We're going to focus on getting the easy marks. And we're going to be methodical. I'm thinking about the cash implication of the information presented to me. So, golden rule of cash flow workings is our starting point. And our starting point is going to be that profit before tax. $15,000 or $15 million, I should say. That's my starting point. Look at this, guys. Straight away, there'll be an option for profit before tax and an option for me to put that 15 million in here. It almost seems unfair that I'm getting marks already, but we'll take advantage of it. So marks in the bank, and I haven't even had to think. Working our way methodically through it. So we've got a tax provision there of $4,350. Is that the amount of cash that I paid out in dollars? No, it's not. It's my provision for the year. So I'm going to flag this, and I'm going to note that it's going to form part of a wider tax calculation. Let's quickly work our way through the other information. So non-current assets. Well, I know that having practiced other questions, there's always a little calculation required to get the cash implications of non-current assets. So I've got the carrying values of 44 odd million and 26 odd million brought forward, but I know that I'm going to have to do a little calculation to get the cash implication of non-current assets. Working my way through, well, look, there's some really easy marks here, guys. Inventory, receivables, I'm just looking at that movement. So I won't dwell on this, but I'm making a mental note to self. I just want that movement. Balance brought forward was 9.6 million. Balance at the end of the year was 3.5 million. So people owe me less money at the year end compared to the start of the year. If people are owing me less money, it's because they've paid me money. So we've received money. Money's come in. So all I'm looking to do, my 9.6 million, and obviously I do the calculation properly. I want to show the movement, and that would come out at dollars. That would come out at 6075. And that's my answer. So I could go straight to my answer, and I'm just putting in the cash implication of that movement in inventory. In this case, I was calling it receivables before. That's my mistake. In terms of the inventory, it's gone down because I've sold it. I've got the cash in. So same principle as for my receivables, but this time for the receivables, and excuse my mistake earlier, guys, I was looking at the wrong line. For my receivables, actually, more people at the year end owe me than they did at the start of the year. So I'm going to say, right, 4.5 million, very roughly, just for an illustration, minus 6.4. If people owe me more money than they did at the start of the year, then I've got money tied up. Okay, I've got money tied up in my receivables. So actually, there's 1,863,000 of cash that has gone out, that is tied up in receivables. So I'd be looking to subtract that. And I'm just going to recap because I obviously managed to read the line wrong, guys. So just very briefly, looking at inventory, we said that inventory had gone down. 9.6 million at the start of the year, 3.5 million at the end of the year. Inventory has gone down. There is less goods in my shops, in my warehouse, whatever. I've sold them, money has come in. So hence I'm adding that $6 odd million. Receivables conversely have gone up. And I said that that's because people owe me money If they owe me money, it means they haven't paid me. So from a cash perspective, I haven't received the money. It's tied up in receivables. I'm going to be subtracting that 1.8 odd million. Just pulling out a few other bits just before we wrap up. Cash I like, but when I'm looking at cash, I'm always looking to see whether there's another element to it, i.e. bank overdraft. So some easy marks here again. Let's call it out. We've got our actual cash position being the 2045 less the overdraft. And that's going to give me an actual cash position of 815,000. If I did exactly the same for the prior year, I had cash in the bank of 1,063,000, and that's less, the overdraft of 429,000, and that is going to give me cash brought forward of 634,000. Now, I just wanted to flag that, and I know I'm running out of time, guys, but I just wanted to flag that because I already had some easy marks in for my profit before tax. I've just worked out what my cash position at the end of the year was, 815,000, wasn't it? We worked out very easily what my cash position at the start of the year was, 634. I've got the start, I've got the end of the year. What is the change? Well, it's 181. And then if I want to, and I'll just pop it in very quickly, I looked at my receivables. We said that we are going to be, for my receivables, I'm getting that line mixed up again, for my receivables, we said that they'd increased by that 1.863 million. We said that that is money tied up. Conversely, our inventory had gone down. We'd sold more goods, so that had resulted in cash coming in. And I'm going to mention one more thing, guys. I know we've run out of time. Just some other easy marks that I want to pull out. If we were to go back to the question, there was a couple of notes down here. So depreciation expense was 4.658 million. Depreciation, remember, is an accounting entry. It's got nothing to do with cash. So if I'm thinking about the cash flow, I'm going to say it's not cash. I started with my profit before tax, therefore I'm going to add back. And again, straight to my answer for some more really easy marks. I'm just going to add back, so positive there on my drop down menu, the 4.6 odd million of depreciation. Likewise, with my second note here, so assets were disposed, net profit of 720 grand. And we know that profit's going to come from the carrying value, less proceeds, so on and so on. It's an accounting thing. It's not cash. It's been included as profit, therefore I'm going to deduct it. And I just wanted to call that out as some fairly easy marks. So profit on disposal minus that 720,000. Now, I'm going to leave it there, guys. We could do the payables thing. We could look at the payables. We could look at doing the calculation for the tax, look at the movement in the loan account, and so on and so on. But we haven't had to try that hard. We've looked at the movement inventory receivables. We've got the easiest marks ever for a starting point of profit before tax. The bottom half of it, the cash equivalents, the movement in that wasn't taxing at all. It wasn't difficult at all. And actually, we've ended up answering over half of it without breaking sweat. So even if you don't like cash flow statements, even if you don't like, trying to put them together, well, it's not too hard to actually get some of those easy marks, and then hopefully leaving ourselves time to do some of the more involved calculations, like getting to the actual tax paid. Okay, great. As I say, overrun slightly there on time in terms of questions. That just leaves us with a little bit of wrap up to do, which I'll do now, guys. I just wanted to mention study resources. So your first port of call should be the study support resources area of the website. And there's all sorts of really useful stuff on here, guys. In particular, Paul and I wanted to call out the specimen exams that you can attempt, and there's some additional multiple task questions as well. So what you're seeing up on screen is just screenshots of how you access those study support resources on the website, and you can see here, as I mentioned, we've got the specimen and those additional multiple task MTQ questions as well, completely in the exam environment, so well worth a look to get familiar. We've also just finally got the practice tests, which is some further practice for you as well.
Thank you, James. Much as I hate to break things up, we are absolutely fast running out of time. In fact, we've overran, which I don't mind, and I'm sure you don't. So I do need to bring things to a close. A big thank you to James, and most of all, of course, to you, wherever you are, for your participation, and goodbye.